So I have to say, once again, if you were in a different country, and those two countries, by the way, which I'm only going to focus on one on this video, but I mentioned the other one the other day, Canada. I've got an additional video to do on Canada by itself. The loonie, as their currency is called, is not looking good. But if you had precious metals, them loonie, how many loonies you could get for it, you'd be pretty happy with right now. Even as silver sits around $14 and gold, around 1100, 1090, 1100, 1090. But the Russian ruble, all currencies pretty much, I should say, worldwide against the US dollar are crashing. Some far more heavier duty than the other ones as far as crashing goes. But Russia, right, we're not talking about a third world country here. We're talking about one of the countries that's been buying a lot of gold in recent years. But against that old US dollar, again, we manipulate all currencies of the world. If Russia's dollar is crashing, it's because the club wants it to. If the Canadian dollar is crashing, it's because the club made it so. Through their Forex market, which is the same way they manipulate the COMEX market, the stock market, they control it all. Russian ruble hits year low as oil prices weaken. Now you're going to constantly hear stuff like that. Well, the price of such as, or the currency of such and such, is really straining them because of the price of oil. Who sets the price of oil? The same people who set the price of that Russian currency, the club, on the COMEX market with their paper futures contracts. Not real barrels of oil, not real supply and demand. They flood the market with paper contracts that don't even have the underlying asset to back it. They just claim they do. Having said that, let me go ahead and read that title again. Russian ruble hits year low as oil prices weaken. Now, here's a piece of this. Associated Press. Everything that all the news agencies get are from two sources. In case you didn't know that. Reuters and AP, Associated Press. So when you hear something on Fox News or CNN or your favorite whoever, whatever your news source is, they all get it from those two sources. And guess who runs those two sources? You got it, the club. Moscow, the Russian ruble, battered by weak oil prices. On Monday, dropped to a new low and broke an all-time record against the euro. The national currency was down 1.8% at 79 rubles to the dollar by 5 p.m. Moscow time, its lowest mid-trading level since December 2014. The ruble fell to an all-time low against the euro as the central bank set the official exchange rate at over 85 rubles to the euro on Monday. Now hold on a second. The ruble fell to an all-time low against the euro as the central bank set the official exchange rate at over 85 rubles to the euro on Monday. Now, why would any central bank of a country essentially devalue your country's currency against another country's when your people are already struggling? So this doesn't make sense to me. And again, with the Forex market, we can set the price of any currency to whatever the hell we want. Just like we do on the COMEX market with all the commodities, gold, oil, silver, energy, you name it. Oil, the mainstay of the Russian economy, recently plummeted to under $30 a barrel, a 13-year low. The ruble is also under pressure from economic sanctions that the West imposed on Russia for its involvement in the Ukraine crisis. Russia is running a budget deficit of 3% of GDP this year, and the government is looking to cut 10% from the federal budget, which was drafted with oil prices of $50 a barrel in mind. All Russian ministries are expected to present their proposed cuts by the end of the month with a view of cutting 500 billion rubles, or 6.3 billion, in government expenses, Finance Minister Anton Siluanov said. Prime Minister Dmitry Medvedev, in televised comments on Monday, said the government finds the price of oil, quote, difficult to predict, and that Russia should use this moment to diversify its economy away from oil, since it has got a chance now to do it as quickly as possible. That's an interesting statement. Should diversify its economy away from oil, since it has got a chance now to do it as quickly as possible. What chance does the Russian economy have to do it as quickly as possible? To get away from oil as quickly as possible? Did something spring up that we didn't hear about or know about? That's an interesting comment, keeping in mind he used to be the president. But I want to show you this chart. Let's focus on 2011. Maybe that's 27 rubles to the US dollar. So, in other words, it costs you 25 Russian dollars for one US dollar. And just take a look. Now, keep in mind, what was the price of precious metals in 2011, early on, right? That's when they hit their peak. $1,900 gold, $50 silver practically. So that's 25 to 1. So whatever it costs, if it's $50 American dollars, it's 25 times that in Russian dollars, okay? Now let's jump over to, the latter part of 2014 and 15. And into 2016. And as you mentioned, you see 85 on the left side. That's where they set their benchmark now. So 25, 3 times that amount would be 75, right? And I need easy math right now, so we're going with 75 instead of their $85 to 1, 85 ruble to 1 US dollar. You thought when I just said in 2011, man, whatever it cost us was 25 times that. So $1,900 gold, again, with the premiums and stuff, you were probably paying $2,000 an ounce. 2,000, or 2, we should say, times 25 would be $50,000 for 1 ounce of gold in Russian dollars in 2011, because the price was around $2,000. 50,000 rubles. Now hold on. Fast forward to today, and if it's just 75, which it's not, it's 85, but again, I rounded down to 75 to 1, which is, of course, 3 times 25. So what's 3 times 50,000? $150,000. Rubles, 150,000 rubles. So just a few short years ago, 2011, 2012, 2013, and you can see it just creeping slightly, right? You could get gold for 3 times less than you can today in Russia. 3 times less. So let's think about that. 2011, in US dollar terms, that was $2,000. Again, I know it was 1,900, but we're going to round to 2,000. When you add the premium and all that, it was probably 2,000 anyways. So we have 2,000 US dollar price for gold. Okay? Follow me on this one. You're going to love this one. Today's price, same thing, US dollar, is half that. It's 1,100, but again, easy math. We're going to knock it down to 1,000. So in 2011, 2,000 gold, right? Today, we're going to round that down to $1,000 gold. So it's dropped 50% US dollars, in US dollars for 1 ounce of gold. But in Russian currency terms, it has skyrocketed. It has skyrocketed in Russian currency. even as it lost half of its value since 2011, the 2011 highs in American dollars. So $1,000. Remember, their peg is 85 rubles to one US dollar. My example here is 75. So it's even more money. If you were a Russian and you bought at the high of 2,000 US dollar gold in 2011 due to what your currency was worth compared to ours, right? You would have made out like a bandit. Even though the price is half of what it was now. If you were to go out now and buy it in those Russian dollars, you're going to spend an absolute fortune acquiring that same 1 ounce gold coin. That, my friends, is why it is so important to have precious metals. And I'm going to say, unfortunately, 90-something% of my viewers are Americans, so they don't get to see and feel and experience what I'm saying. But you can certainly go look at this. This chart isn't lying. This chart is a real chart. Look at this thing. January 2011 to January 18th, 2016. This is the chart. This chart ain't lying. It's just math. It's just numbers, right? It's just data. If you had to buy gold today in Russian dollars, again, even though it lost half the value since 2011, it will cost you far more money right now in Russia than it would have in 2011 when American dollar-wise, gold hit its absolute highest price, $1,900. This is why you've got to have your precious metals. Take care.